We are proud to announce another major 52-week high, which required us to sell at one level and let these other levels continue to run up and out of the money calls that were bought a long time ago. And Google has finally taken the leadership role. Yes, I can say that you have to be careful up in these price areas. This thing has ran parabolically straight up. But Google is the leader. We have featured it. We've featured it for a number of years. It took a lot of years. This is the trade of the year for SMF. We have been behind this thing when that new product rollout, that mobility, the way that search is going to change, the way that that whole smartphone thing is going to change, that Google started a few years ago building out the Android, releasing the Nexus today in Japan. Not to mention, there's a lot of things that are being put in there that are going to change, that are going to enhance revenues. You got the YouTube revenues running. This thing has been out of favor. It has underperformed a number of years when the broader markets in their bears were like the Pricelines, the Baidus, the CMGs, the Amazons. Once again, all of the MasterCards, the Visas, I can go on and on. There's plenty of them that had performed, made their all-time highs, and Google underperformed. But one day, as that rollout would build out, we would get up here, and this name, we talked about it coming back up to 775. It's never been this high. And it is at all-time highs. When Google, back in the financial crisis, was up here at the highs, and we traded it all the way up there, what a glory thing that was back then. But now there's going to be a new revenue stream. The thing about it is, it's overbought. You got to be careful. And you got to be selling into the upper end of the moves. You don't have to sell everything if you're using the call strategy. The 740 call, which came into play, is up another $11.50 today. Yes, it is. They're inflated. They will have to come down. And the good news is, fundamentally, any drop in this stock on any price volatility at all, this is outperforming Apple Computer. Yeah, it is. Apple Computer, the talk is, why should I own Apple? Because Apple has made all of its highs. This thing here has just now gotten above the highs of 747.24. And now we're $20 above where this calendar high once was. Right here. And we have taken that thing out. I'm going to draw a trend line. It is the trade of the year, because it is the bellwether of our internet. The way that they're going to monetize future-looking revenues, they're going to continue to eat up the Facebook. There's the good, the bad, and the ugly, and this is the good. People are going to have to pay and we got increased volume. At an hour or almost 2 hours, we're running at 2.4 million shares. So this breakout to these all-time highs is exactly what we said, trading up to the 775 area. And we're $10 away from there. But this thing is strong. The high-frequency algorithmic programs keep driving it higher and higher. They keep buying and stair-stepping it up and up and up and up. The most important thing about this trade of the year is where this thing was left for dead by all of the people, all your pundits on TV, all of your stock shows and everything. They left this thing for dead. And the thing about it is, if this thing is going to perform well, will it have some fundamental challenges? They all will in a lower growth environment. The thing of it is where the increased revenues come from YouTube. They're going to change how they monetize the search pay per click. And those things are going to really start to bear fruit over time. And we have just gotten into the fact that Google is overbought, but we continue to let it run. And there will be a pullback at some point. However, as of this calendar year, 9/25 of 2012, and the October earnings are going to come up on this name. This name is not the way that it was in all the other calendar years. You got all the stock pundits now wanting to buy this over Apple, Google over Apple, because Google has a long ways to go higher. There were targets that should be up there right around 825 to 850, and that's based on their forward-looking rollouts. They can maintain their margins by adding the new revenue structure to offset the weaker growth environment. This name here is the place to be, and we have featured it all along. Yes, Apple was a major player, but guess what? This bellwether here is outperforming all the other ones that have performed. Okay? Priceline performed to all-time highs. We were shorting at $7.75. This thing is up $16.92. They're back in favor. We trade these long as well. But I can tell you right now, this will end up being the bigger bellwether over this Priceline in the travel industry. And that this name here and some other names that are lagging behind, like the Chipotle Mexican Grills that made their all-time highs and ISRGs. This name here, over Apple, this is the pair trade. Long here, selling into the Apple in the short term. So the sentiment is on the trade of the year. We've been behind this name for a number of years, and it's kicking. And then those fundamentals are going to come into play, and we're going to be looking at trading this thing in a different bull. This thing is a full-blown bull as you could get. And that it did, it was cheap at $550. That's a $200 move down here. It happened in 1 week, 2 weeks, 3 weeks. There's a 1 month move. 1, 2, 3, 4. There's 2 months move, and 1, 2, 3, 4 right down here at the bottom. That's 90 days on this weekly chart. And we will continue to buy pullbacks. At times it'll get too overbought like anything else in bull rallies, but it won't change the fundamentals and it won't change the background. We ran, in my view, quite far, and they just keep pumping it because they want to own it. And everything is bull about this moving forward. If there's any drop in the earnings season, because it's priced to perfection now, based on all of the good things that I'm talking about, running this price and anticipation of what we've been covering for a number of years. There it is, 222 highs, 1 low, big bull rally move, trade of the year, Google. We started talking about this back in 2010 and 11, and even in 2012. It came 5 years later. It was about 3 months in here where we got it. And it took that many calendar years, and it took that rollout, that build out, the change in the revenue models at Google. Google is the place to be. It is the backbone of the internet. It was never going to go anywhere. It had to work off all of the pro and the con. Wall Street treated the name bad, and they regret it now because most of them aren't in it. That I can tell you. And the thing about it is, buy the pullbacks. We have a new leader. This is the leader. Apple is not the leader right now. No, it's not. It's this name, and we said it. This is the leader. Buy the Google on the dip. As we have said, they gapped it up this morning, and it continues to run higher. We will scale out. Our next point of exit will be at 775 when we get there. And we will start closing out a lot of them from the calendar year trade, because we're going to go into the earnings, and we would rather have our profit. So we've already made enough of the calendar year trade of the year here, and it was left for dead. And I put my hands out there to Tommy and Johnny because he stuck with it. And the thing about it is, it's getting paid big. It's due for some pullbacks in here. We get too overbought. I can't say that enough. But any dips and the way that they build this company out for forward-looking years, this name here is going to control our internet. And they're going to be the backbone. And they're going to be the leader. They will always be the leader until, something really changes. But once again, it's all about how they monetize. And all of these acquisitions, that mobility acquisition, hey, they made money on that thing. People thought they paid $12 billion. That was way too much, people thought. But you know what? It wasn't too much for Google because they knew what they were doing. And it reflects in the price, and it reflects in the build out, it reflects in the company. And I'm looking forward to the earnings on October 8th. We will be selling the rest of them shares up there right around the 775 area as far as the call contracts go. That are the longer term calls that we have bought when these things were pennies on the dollar. And we always said, buy up and out of the money 750 calls when the thing was down there at $550, $600. Buy way up and out of the money. Buy 6 months out. They were cheap. The chances of it going up there, no one really knew. It was just a matter of time. And we've had over 3 months. And I'm happy to say that this is a place to be. Buy the pullbacks. It's been discounted for too many years. There will be volatility in Google, and you'll have to learn that part of it. In the shorter term cycles, as far as overbought and oversold goes, we're on the upper end of the we're on the upper end up here now. And so you have to be cautious about the price in the short time frame, not the long time frame. But you've got to, know when to scale out and scale back in and buy the dips. Trade of the year, Google, Google, Google. And lots of pundits on TV now, they never wanted to own this name. They're talking about how great it is now. They always do way after the fact. What was wrong with doing that 2 years ago or a year and a half ago or when everyone was trashing the company and left it for dead? Sorry, trade of the year right there. And hey, I always have said that this name will have to outperform the Apple, the Pricelines, and all the other big bellwethers, that this one here would come back and be the 800-pound gorilla that you see today.